Chad, welcome back. Happy Friday. Good to see you again.
Yeah, great to be here. Thanks for having me on.
We spent a good part of the morning talking about, for example, Three Arrows. You do think there will be more failures that pile up?
Yeah, I think we're probably just in the beginning stages of this. It's always hard to call a bottom and catch a falling knife and know when exactly things are going to rebound. But my sense is that we're waiting for second order and third order effects after the failure of Terra and Luna. And we're starting to see those now, which is that there was just a lot of leverage that built up in the system. And it's very opaque. A lot of it's actually mostly offshore. And it's starting to unwind. And that's a painful process. And it's also unclear exactly when you kind of get through that entire reset and recorrection. But I think ultimately it's fundamentally a positive thing.
Chad, help the viewer understand. I mean, the argument is classically prices are down. That's bad. But the underlying technology will continue to get support. That's good. How does that happen if retail and to some degree institutions feel burned by the price? Where does the fuel come for more innovation?
Yeah, well, look, I mean, it's very unfortunate that there was a conflation of innovation and financial innovation, which I think is the real story here. And instead, we had financial instability. Because of this opaque leverage, you just couldn't tell where all these risks were building up. And really, in some ways, this is just an age-old story. You're borrowing short, lending long. And I think it's really unfortunate that people lost money. And I think it will, in some ways, set back the space because you will lose some early adopters or some of the people who just came in new to the space. But I think on the other hand, the fundamental technology here in the adoption curve that we see, institutions that are coming in, how you can get your financial system to operate at the speed of the internet, those are things that need to happen. And they're going to keep happening. And, you know, you had a lot of failures after the dot-com bubble, and it didn't change the adoption curve fundamentally for the internet. I think that's the same mental model we need to use here.
Yeah, innovation and speculation do often go together as well, bring a lot of capital with them, which can ultimately be a good thing. This is a good opportunity for you, Charles, to just tell people what your company does. What does Paxos do, and how are you positioned for this future that you're describing?
Yeah, so we're an infrastructure firm. We power PayPal and Venmo, Interactive Brokers, a lot of different big firms. In fact, there's about over 600 million end users that can be powered through the partnerships that we have. So we're really fundamentally trying to bring people into the space by bringing brand names into the space. And when I look at kind of the turmoil out here, I also have to think about how are we positioned. And really, fundamentally, we've built a fortress balance sheet. I think you have to have an all-weather business model. And in fact, we're doing better as interest rates rise. Our revenues are going up. We're still hiring. We might hire a little less quickly, but we're still going to keep hiring. And this, to me, is really an opportunity. It's an opportunity because you can focus on what are we really trying to achieve? How can you really allow mainstream adoption? And fundamentally, this also is going to bring up, I think, a point around how do you make sure that you're regulated in a way that allows people to trust you. And actually, most of these failures have been outside the U.S. where there wasn't a regulatory model. And we've spent a lot of time investing in regulation because as an infrastructure firm, that's how you can really allow not just end retail users, but real large institutions to come into the space.